Welcome everyone to the Price Action Labs YouTube channel. So in this video I'm going to be going over some trades I took from the week Monday the 10th to Friday the 14th of November, right? So let's just quickly break this down. So this is S&P 500 or ES futures. So how was I looking at this market? So if we just go to the 4-hour, I like to start on the 4-hour because the 4-hour gives us a fundamental understanding of where we are on the higher time frames. So what we had was we had a high, we had a low, we had a high, we had a low, and then we had a high. So that's kind of step one to the model. Step two is the dealing range from this low to this high. And step three, we establish our premium, so above the 50%, and our discount below the 50%. And once we've done that, we're looking for fair value gaps in the premium and discount. So if we start with the discount, this is the order block, right? So I always mark out the order block, so it's the candle before the fair value gap. This is my first point of interest or my first key level. So I'm just going to drag that over to the right. The second key level which I want to be focusing on is this one over here, which to me is still valid, right? Because we didn't really have a close outside. So these were the key levels that I was interested in this week. So let's kind of break this down and go to the 15-minute chart. So on the 15-minute chart, if we break this down, again, I follow the same approach on the 15-minute chart. Now, the four things I look for, right, is I look for market structure, I look for dealing range, right, I look for premium and discount, and then the last thing I look for is a fair value gap. So these are the three things that I look for. So from here, we see high, low, high, low, and then high over here. So I get questions about this. I'm going to quickly break this down. How do I look at 15-minute structure? So for me, this is a breakdown here. Now, for me, this is a range, right? This is like a consolidation, a range, a sideways price action. So I want to look for the clear swings, right? The swing points high, swing points low. And then I want to see the swing point over here. So again, this to me is not really a structural high and low. This is more of a range, right? Considering this was also Tuesday the 11th, so this was Veterans Day, so I didn't really take much of a try. I took a break even on this day. So nothing much here, so I wouldn't consider this market structure. And then this was the structural high over here, all the way up here on Wednesday. So once we've done our structure, we've got our dealing range, most recent high, most recent low, right? It's not this low, right? Because this low didn't break any high, right? This is the most recent low. This is the most recent high. So we just project the fib, right, from the low to the high. And the last thing we look at is fair value gaps. And so the fair value gap is something I'm going to be breaking down in this video in quite a lot of detail. So let's first begin with Wednesday. Now, if we go to Wednesday, I'm going to go to the Discord and show people my pre-market plan. But on Wednesday, if we just take a look at this, so this was now 7:30 a.m. Eastern or 12:30 p.m. in the UK. This was my key level. So again, what I'm looking for when I have a key level is I'm looking for this, right? I'm looking for a 15-minute fair value gap. So that is the 15-minute fair value gap, just like that. So once you have the fair value gap, this now becomes your key level. So this key level, again, a couple of things to note about this. I often use the weekly opening price. So the weekly opening price is a big tool for me, right? So let me explain what I mean. So if we have a bullish week, so the week obviously opened like this, and we saw Monday's price action, Tuesday's price action, continuing to move up until Wednesday. Now, if this is the weekly opening price, we want to consider this weekly opening price to be a magnet, basically, right? So this is a magnet. So if we can break below this level, I am happy to take shorts down to this weekly opening price, or at least down to the local fair value gap, which is this one over here. And that was basically the trade thesis for Wednesday. So what I'm saying to traders is this, right? I'm talking about my pre-market plans on Wednesday. So on Wednesday, if I kind of break this down a little bit, this was the position I got into here on Wednesday, the 12th of November. So if we just go back to the charts, let's break this down. So when I see price coming into a key level, there's only two things that I expect. So I'm waiting for market open to happen. So again, I'm just being patient. I'm not looking to take any trades until 2:30 p.m. in the UK, which is basically 9:30 Eastern. So I'm waiting for that market open. right? So here we have market open. Now, for those who trade the opening range breakout or the 5-minute orb, this is basically how that works, right? So the way that an orb will work, right? So the way that I look at the markets now, I want to have a key level. I then wait for an entry in the key level, and then I use order flow to confirm my level, right? So whether it's going to go up or down, you need to have step 3, so order flow. So we've ticked a key level, right? This is a 15-minute fair value gap. We have an entry over here, and this is where we use orb. This is where the orb comes in. Opening range breakout. And the last thing we're going to do is we're going to focus on order flow, right? So we're going to understand why this level gave a short. So when it comes to key level, we've already established that. So it's just basically a 15-minute fair value gap candle before. So it's essentially the order block for those who trade ICT. And you want to just take a rectangle like this, and you want to mark out the first 5 minutes. So this is 9:30, 9:31, 2, 3, 4, 5. So this is the first 5 minutes. So this is your opening range, right? 5-minute opening range. So this is what we do. We take a high, we draw a line like this, we draw a line like this. So this is our 5-minute opening range. Now from here, this is what's interesting. I want to see a closure of a candle outside of this range. This is just a confluence, right? I don't trade the 5-minute orb without using order flow. So this is what's going to be very important. When we come into a key level, right, I'm not looking to enter here. This is a mistake for most people, because what I used to do is I would enter at the break and I'd have my stop loss over here. And eventually what would happen is something like this would happen, where I would often get stopped out at break even, or I'd see price heading towards my stop loss. And I didn't really like that, right? This is not my preferred way of trading. So you don't want to use the orb. What you want to do is you want to use 15-minute fair value gaps. And this is the critical thing this is what worked for me, and I think it's going to work for a lot of traders who mess up the orb. You want to focus on local 15-minute fair value gaps. So you want to find the last fair value gap in price, right? The last fair value gap. Now there was one over here. There was probably one down here somewhere. I don't usually use ones in Asian range. So this is an Asian range. I don't normally use these. I want to find a fair value gap in either London session or New York session and trade the order flow reaction from there. So this is what I'm doing, right? This is what I want to break down. You have to get used to using the order flow at key levels. Now, the opening range breakout, this 5-minute orb, is just a confluence. So if we can break below, in this case, we break below the low, and we didn't really get a closure above. So this here is important, right? So this here, the fact that we couldn't close above the 5-minute opening range high, and we have broken below the low, this here gives me confirmation to look for shorts. But this is not the main confirmation, right? What you're looking for is order flow. So this is what I like to do. This was the candle that broke below the key level. So I'm going to draw a red line like this. This is all I do. So this is my dash line. So what I'm looking for is this. I would like to see price come in and retest my zone. Now, during this retest, I want to see what's going on with the price action. I want to see aggressive sellers failing, and I'm only going to take a short if we get below this red line. This is basically how I trade. This is the best way, in my opinion, to trade break and retest. The main thing is you need to understand what's going on over here. So let's break this down. If we take a look at what was going on here, this is the price action we're looking for. So this here was choppy price action, right? This wasn't the best price action, but we want to see what was going on in this region. Now, if I continue to play price on, this was my entry for that day, right? This would be where you go short and you have your stop loss just above this zone. So now, just going to be breaking down the entry. What makes this entry valid? So I entered this probably at around 10 Eastern. I'm in the shorts, happy with that trade. So from an order flow perspective, let's break this down now. So this key level, so on ES, this key level is about 68.90 to 68.80 to 83 area. Let's call it 68.90 to 68.80. This key level was very, very telling, and I want all the traders to understand what was going on here. So let's break this down candle by candle. So first we want to focus on region 1. Now region 1 was very telling. Region 1 was very telling. Now what was it about region 1 that was the first thing I was interested in when I took this trade? So region 1 was interesting, where what we had over here is we had basically trapped buyers. So anyone can read this, right? Anyone can understand the basics of order flow. I'm going to quickly break it down. So order flow, the way it works is you have two numbers. You have the left number and you have the right number. The left number is the bid. The right number is the ask. The left number is the aggressive sellers. The right number is the aggressive buyers. Now, when you see a blue delta, so in this case, we see a blue delta over here, blue delta over here. When you see a blue delta, that means that there's a lot more aggressive buyers than aggressive sellers. Now, where my cursor is, you can see 0 for 101. Then you see 0 for 23, 0 for 47, 0 for 15. So what you're seeing over here in region number 1 is you're seeing aggressive buyers hitting the ask, right? There are more aggressive buyers than aggressive sellers. Now, what happens is after region 1, right, we were unable, if you're an orb trader, we were unable to break above the 5-minute opening range. And this region 1 resulted in the break below the level. So the way you want to use orb is you want to ask yourself, where was the final high? If you're looking for a sell, where was the final high? The final high of this session, so this is around 9:39. Eastern 9:40, we start to melt down. This came after aggressive buyers were here. So in region 1, you want to ask yourself, this is why I put it in blue. Aggressive buyers hit the ask. What we see is we see aggressive buyers fail. And the reason these aggressive buyers fail is because the market tanked lower, right? We see this tank at 9:46. We significantly break below the zone. So that's the first thing we're looking for. We also want to focus on price action inside of the zone as well, right? There's a few things in this zone which is very telling. So this is around over here. So this is now region 2. So if we look at region 2 now, what was going on inside of region 2? So region 2 is we had this price action here. So we had a green candle, again, green candle before the huge drop over here. So what we had is we had price breaking below the level 946, right, which corresponds to this candle here, 946. We see a ton of aggressive sellers, right? So we see aggressive sellers stepping in and breaking below the level. So we have a downside move supported by heavy selling volume. That's what we want to see, right? This is how we use volume. You can see there's so many aggressive sellers hitting the bid, lots of negative delta, but no reward. Sorry, no buyers, right? No buyers stepping in. There has been reward, sellers have been rewarded, but there's no aggressive buyers to stop this move to the downside. This is setting up for shorts, right? This is what you want to look for in shorts. But if we look at region 2, right? Region 2 is very telling. Now, specifically this candle here, which corresponds to this candle here. This whatever they call it, hammerhead or something like that. This candle here is very telling. In fact, if we just take a look at what was going on here, we see 0 for 31, and then we see 51 for 350. That's roughly a, whatever that is, that's a 7x difference between the aggressive buyers and aggressive sellers. So throughout this zone, we have multiple positive deltas above the zone, and we have a positive delta inside of the zone, right? Even here we see a lot of positive delta before the sellers really step in and they break below the zone. So if you look at this just from a candlestick perspective, it is difficult, in my opinion, to actually judge who is in control between these two levels, right? So what's going on at region 1 and region 2, if I simplify that for people, is we see aggressive buyers outweighing aggressive sellers. Now, when you see aggressive buyers outweighing aggressive sellers, followed by a break to the downside. When you see aggressive buyers outnumbering aggressive sellers and you see a break to the downside, this is what we call an absorption of buyers. Now, this is how an opening range breakout works. So if you're an opening range breakout trader, these are the 3 fundamental steps. You're looking for aggressive buyers followed by a break to the downside, which shows you that these buyers in region 1 have been unsuccessful, right? These are unsuccessful buyers, right? These are unsuccessful buyers. We call this an absorption of buyers, right? So the trade setup was valid if you simply understood that aggressive buyers were failing to break above the level. Now, this is the absorption area. So again, with the absorption, if I share my entry, this is, yeah, exactly. So this was the entry here. So ES shorts, 15-minute fair value gap created at 7 a.m. Eastern, break below at 9:45, retest at 10:05, right? Massive absorption of aggressive buyers. So this is what we're going to be focusing on. So this was the trade entry just below that red line over here, which is basically this dash line over here. This is where your entry would be valid. So what you're looking for, this is the whole cycle, right? This is the whole cycle. You want to see price doing a break and retest. So for me, this is the break, this is the retest, and then we only enter after the retest. And that's why we had price melting the way we did, right? Bit of a patient trade, but eventually we did go on to melt. Now the question becomes, how can you catch this, right? So you need to know what's going on in region 1, region 2, and now the third region. The third region was what we're going to be focusing on here. So my entry for that day was 68.77, and we want to be focusing on this region. So this was the retest, right? The two areas I've circled are going to is the main reason I took the short, right? So this was the main reason I took the short. Now, just going to bring these together. What was going on over here? Who can tell me what was going on over here? So what we saw was this price action here break to the downside, and of course when we get to our line we see another break to the downside. So we really want to focus on this region here, and that corresponds to this region here. So I know the numbers are a bit small, but the numbers in order flow are not as important as understanding the delta. When you see a lot of blue, right? So we see a lot of blue delta here, a lot of blue delta here, same with here, and then we eventually melt down. So from a logical perspective, if I were to show you this image, what this represents is we see a ton of aggressive buyers hitting the ask, right? A ton of aggressive buyers hitting the ask. There are more aggressive buyers than aggressive sellers. And then we, of course, break below that red line, which I spoke about earlier, right? This red line over here, which is where the execution was. But the only reason your order blocks or your fair value gaps or your opening range breakout setups are going to work is if you have a fine understanding of where passive buyers and passive sellers are sitting. And here there's tangible evidence to suggest that inside of your key level, there were passive sellers. Now, the reason I say that is because we had a ton of aggressive buying here and a ton of aggressive buying here. So if we go to the candlestick charts, what we're seeing is all throughout this region, we are seeing aggressive buyers hitting the ask. Then we see break, let me spell that right, break to the downside. Now, when you see a break to the downside, that is the confirmation that those aggressive buyers were unsuccessful. And this is what we're looking for. We want to see aggressive buyers hitting the ask. When we see price breaking below our initial break, this is what confirms the entry. And so that's how I traded on Wednesday. So Wednesday was around a 1.8R trade or a 1.6, something like that, whatever it was. So risked about... yeah, it was about a 1.8R trade, right? So the profit on that trade, 453 for that day, 1.9R. So didn't like the choppiness over here, didn't like this, so I just closed early, right? So even though I think for that day price did, in fact, tank pretty heavily, that was the high of the week. So just going to a 5-minute chart now, this trade definitely did give another entry over here, and then of course we broke to the downside again. So that was Wednesday's trade, right? Wednesday the 12th. Now we go to the 13th. So the 13th was another very good trade. So how was I looking at the 13th? So just to give people some context, there was a level on ES. Now this is what I've made separate videos about this, but understanding where your levels are with order flow is your highest return on investment task will simply come from knowing where the key levels are. So we had this key level on ES. This was now Friday the 31st of October. This was your key level. So if I just put this in gray, we're just going to drag this over. So this was a key level I had basically throughout the whole of November, right? So 3rd of November, 4th of November, 5th of November, we had a lot of aggressive selling over here, right? A lot of passive sellers, sorry. So what we had, if you go back on the order flow, we had passive sellers here, passive sellers here. We had a few passive sellers here, although they didn't really follow through. Thursday's trade was all about coming to this level. So this was such a critical level for Thursday. Now, when we came into this level, right, we go to a 1 minute chart. Again, I always execute on the 1 minute chart. Let's kind of see what price was doing. So again, we're going to come to our New York session. We're going to come to our New York session, and we're going to break this down. So how was I looking at the New York session on that day? So this is how I was looking for it. So this was Wednesday, and now we're going to fast forward to Thursday. So this was Thursday, 13th of November. So 1:56 p.m. or just basically 9 a.m. Eastern, half an hour before market open. My plan for the S&P was pretty simple that day. So for ES, these are the two levels I was looking at. If we break above this level, so this is now 68.90 area. If we break above 68.90, I am long. If we break below 68.40, I am short. So these were the only two levels I was looking for. That's how simple your plan is, right? So this was my execution, right? So this was probably the best trade of the week in my opinion. I'm just going to break it down. So if we go to ES futures now, let's quickly understand what was going on. So now we've tagged into our key level. So just again, for those who didn't understand that, this key level was derived from the 31st of October. So price held as demand. Then if you go back on the footprint charts, you will see price holding as supply, price holding as supply, price holding as supply. We tried to hold as supply, and now we've come back to this level. So essentially, this is a flip zone, right? Price is flipping from demand to demand. Then eventually on Thursday, supply. So what allows you to predict these flips from supply to demand, demand to supply, is order flow. And that's what I wish to break down in this video as well. So if we go now to the 1 minute chart, how do I approach market open, right? Because a lot of people say, what's your entry model? How do I approach market open? So again, I have 3 simple steps: key level, entry, like this, key level, entry, and then last but not least, order flow. You need these 3 things. In every trade, you need to tag into a key level, right? You need an entry, and you're looking for order flow confirmation. That's it. Those are the only 3 things you are looking for. So again, we use the orb just to help us out. So we just draw a box over the first 5 minutes. So the first 5 minutes was actually, this is a pretty fast trade. This was the first 5 minutes. So 9:30, 9:31, 2, 3, 4, and my entry was at actually 9:35. So these first 5 minutes, very important. So notice how my red line, this is the initial break. So let me just quickly break this down, because a lot of people ask me, how do I use order flow on the lower time frame? So here we have 9:29, 9:30. Break below the key level, right? There's the break. So from here, I want to be entering. This is my break line. So if we see a retest, right? If we see price retesting, aggressive buyers fail, I will go short in this region. So that's exactly how I use order flow at key levels, right? This is how I trade the orb. For those who are wondering, this is how I trade the orb, right? So there would be your entry right there, right? You can have it here, or you can have it here. I think I had it somewhere in between. I'm just going to say I had it here. Stop loss above these wicks over here. I'm happy to have those stop losses over there. In terms of my target, right? For me, I'm quite conservative with targets. I just go and target the next 15-minute fair value gap, right? I don't like to be greedy. I don't like to hold trades for very long. I like to take my piece and get out of there. And one thing I found is price action on the S&P very reactive to these 15-minute fair value gaps. So once price hits your level, you are out for the day. That's the only thing you need to take away from this video as well, right? So my exit was here, but I want to break down the actual trade in terms of the order flow. So it was about a 1.8 R. So risk reward wise, it was okay. I usually trade anywhere between 1 to 2, sometimes 2.5 R. Now, again, I want to draw attention to this area here. So market open first 4 or 5 minutes, right? Or even here, first 4 minutes, right? In blue. This is what I want traders to focus on. So my execution on that day, if I break it down, only a 7-minute trade, right? Only a 7-minute trade. So again, just from an order flow perspective, right? In fact, I think I've got a better screenshot over here. So let's see. Here we go. So this was the trade on Wednesday, Thursday. Here we go. So Thursday the 13th, right? Thursday the 13th. So here was my execution on that day. So 13th. So this is now 8 contracts on MES, 14:35. So 9:35 Eastern. Here was the 1-minute execution. And I'm going to break down the execution one candle at a time. So here was your candle at 9:30, right? There's your 9:30 candle over there. So boom. There's your 9:30 candle. Now, what do you notice at that 9:30 candle? Yes, we break below the level, so this is my break line. Also, another thing to notice at this candle is what was going on here, right? This is where I think, personally, candles are not good enough. Once you have your order blocks or your fair value gaps, you have to use the order flow to derive who is in control at those levels. Okay? So this is how we do it. So what's very telling about this image I'm showing you is when you see this blue delta over here, right? We see a red candle, so we see a clear break below the level. But look what's going on at the upper half of this candle. This upper third, I guess, or this wick. This wick was actually filled with a lot of aggressive buyers. Now, in this case, we see 289 for 405. So what we're seeing is we're seeing signs of early buyers, right? Or we're seeing buyers fail, right? So think about it. If we had buyers at 68.49, 68.48, and we broke below the level, were these buyers successful? Well, not really. So this shows us that there's a passive seller sitting around here, sitting around 68.49, 68.50. There is a passive seller in the market. The reason there's a passive seller is because aggressive buyers failed to break above the level. Because if these buyers were successful, we would have broken above this level, and we didn't do that. So if I continue to play price on, what we see is when you look at my execution for that day, so my execution for that day was 68.39.5, we'll just say 68.39.5. So there you go. So stop loss just above these local wicks over here. So again, why was I confident putting my stop loss here, right? What gives you the confidence to put your stop loss here? You want to know what's going on here as well, right? You want to know what's going on here. So let me just drag this down. There you go. So what was going on over here? Same thing. Same thing as before. Where if you look here, you're seeing, here we go. So this is a green candle. Before we had our big red candle breaking below the level. Then our next candle breaking below the break line. But if we look over here, right, and also here, these two regions here, right, very, very telling what was going on with the 5-minute orb, right? Very telling what was going on. So again, we see a lot of blue delta. The numbers themselves are not important, right? Once you get comfortable with order flow, you can skim the delta. You only need to understand the delta at key levels, right? The numbers themselves are not so important other than finished auctions, which I'm going to go over. But when you see a lot of positive delta, a lot of blue delta inside of this zone, and we broke below the zone, right? So a ton of aggressive buying over here. So at this price point, here, this was roughly, call it 68.49, right? 68.49 like this, right? So let's just label this. So 68.49. What was going on at 68.49, right? It's a very simple recipe. We saw aggressive buyers. This is the 5-minute orb, by the way, right? So the 5-minute opening range breakout for those who trade that. This is the first 5 minutes. So 9:30, 9:31, 2, 3, 4, and then 5, right? So this is the 5-minute orb. If I'm going to put in yellow. This is the first 5-minute orb, right? So 68.49, Thursday the 13th of November. Aggressive buyers break below the zone, right? So what does that mean? If these aggressive buyers at 68.49, if they were successful, they would have broken above this level, right? We would have seen price. In theory, if these buyers were actually successful, they would have broken above the level, right? We would have taken longs. But the fact that we broke below the level once and then twice, that shows you aggressive buyers were hitting the ask, but we saw a break below. So what this means is this is an absorption, right? What does absorption mean? Absorption is a fancy way of saying who is in the most pain in the market, right? Who hasn't been rewarded? Who is being aggressive and who is failing? That is how you determine your direction. That is how you determine if a fair value gap is going to hold. That is how you determine if an opening range breakout is going to be bearish or bullish. You're looking for aggressive buyers to fail, price breaks below. This confirms your entry that the aggressive buyers haven't been rewarded, right? This means at 68.49, there was a passive seller, right? Because we followed these 3 steps over here. And it's that simple. So I don't think it's complicated. A 5-minute orb, or whatever, 15-minute orb. If it was a 15-minute orb, you'd apply it in the same way. And then, of course, this was probably the best trade of the week, only because we had such an extensive trade to the downside, very big trade to the downside. I think we went all the way down from premium to discount. So this was a huge trade. Obviously, I only called it down to here. This was a massive trade. Now, Friday's trade, right? Friday's level. Now, how did I find Friday's level? So that was the shorts from Thursday. So that was about, if I break that down, so this was Friday. So Thursday's shorts, just finishing off Thursday. So Thursday I took a short from 68.39. Stops initially, so stop loss at 68.49. Targeted 66.25, I think it was. I closed this trade early, so there was no profit. 6.10 for that day. So that's a 7-minute trade, so it was a very quick trade. And then we move on to Friday. So Friday, I had the same sort of levels from Thursday, and I had this level over here. So a lot of people ask me, how do I find my key levels? Again, this was a bullish ORB, right? A bullish opening range breakout. And I'm going to break this down as well, right? So this is now Friday's trade, right? Probably the best or the only long trade we had actually was this one over here. So I'm going to break that down. So for us to understand what happened on Friday, the 14th of November, this trade, we need to understand what happened on Friday, the 7th of November. So if we go back to the 7th, what we had was we had a flip zone, right? I call this a flip zone, or in ICT terms, I think they call it a breaker. So on Friday, the 7th, we had this price action over here. So we had a key level, right? This was our key level. So this was a 15-minute fair value gap. This was the candle before the fair value gap. This in itself was the key level. So this key level, the reason it was a key level without going on to the order flow is because we had a reaction, then we broke to the upside. So this was basically a 15-minute fair value gap. I think in ICT terms, they call it a breaker or whatever it was. But this was my key level for the following Friday as well. So the key level again was 67.16 to 6,700 basically, right? So 6,700 to 67.16.15 area. So once I had that level in place, I was just simply dragging it over. That's all I was doing. And I follow the same principle as Thursday and Wednesday, just flipped on its head. So this is what I'm looking for, right? So this is, again, a very, very important lesson, just how the market works, right? We had our premium, we had our discount. I'm looking to buy in discount and I'm looking to sell off levels in premium, right? Friday's level last week held on Friday again. Clockwork, right? This is something you want to pay attention to. Take your levels that work. So on last Friday, I didn't catch the longs. They're a little bit late in the day here. Take these levels from the previous Friday and just drag them across. You'll be amazed at what you'll find. Almost like magic, price bounces off that same level again. The market will react to where supply and demand zones are. It's your job to find out where they are and just trade in line with them. Now, that sounds simple, and it is simple. You just need to know how to do it. And this is what I'm going to be breaking down. So think about this. We come to market open. Again, we have 2:30 p.m. now. So 2:30 p.m., there we go. So again, what do? how do we do this? So we have our key level resting over here. So because we are in discount, right? This is the other thing. This is the other thing. You need to use everything in conjunction. Because we're in discount, that's the first thing. The second thing is if we look at our PO3 or our power of 3, it looks a bit like this, right? So this is the weekly opening price up here. This is the weekly opening price. We're in discount. And also, for those who trade power of 3 in a lot more detail, we were also above the daily opening price, which was here. So we're in discount, we're above the daily opening price, and we're above the weekly opening price. So this gives us extra confirmation to look for longs. So going into the session on Friday, my bias was bullish for that reason. Now, if we just continue to play this on a little bit, let me just show you my bias for Friday. So my bias on Friday was very simple. So we had 67.90 and 67.20. So 67.20 was here, 67.90. So what I'm saying is if we break above this level, if buyers reclaim control, I will look to buy from key level 2 all the way up to key level 1, right? Buy below the daily opening price, buy in discount, target premium. That was how simple the trade was, right? So this is how the market played out. So I'm going to be breaking down my executions for Friday. So again, we take the first 5 minutes, just as normal, we take the first 5 minutes. So 9:30, 9:31, 2, 3, 4, and 5. Just like this, right? 9:30, just like this. So now from here, we can see we've broken above the 5-minute range. So now from here, this gives me confirmation. But I want to see a break and a retest to go long, just like I told my members over here. So this is now 9:45 Eastern. I'm looking for a simple break and retest. Break above the level. I want price to come into the zone. I want to see aggressive sellers unable to break below this level. That will give me confirmation to go long, right? That's all I was looking for. So this was my trade execution for that day. Here's what we had. So we had break, we had retest, and this was the retest all the traders should pay attention to, though we had quite a long retest. So my entry was at 67.22, like this, right? Stops were initially below this level as well, right? And so I sat in this trade for a while. I widened my stop a little bit because there was a fair value gap here. I really sat in this trade. Wasn't the best trade in terms of price action, but there's not much we can do about that, right? That's what I had to sit through. So not the bit of an ugly price action, but we did get our zone in the end, right? So we had a very good setup over here, right? So in terms of execution, what was I looking for in terms of execution, right? So execution on Friday was like this. So diving into this price action, I want to show you what was going on at 13:13, so 15:13 or 10 EST, right? So stops were initially down here, 6,700. What was going on inside of this key level, right? What did you see over here? So if I continue to play price on, this is the retest. I think we had 3 retests before we broke to the upside. So my entry was here, right? So 67.22. So it would have been 67.22. So what was my entry again? So 67.22.25. So here was my entry, 67.22.25, right? Stops just below just above the bottom of the level. And I wanted to target the next 15-minute fair value gap, right? Or the daily opening price. So the daily opening price, again, was just over here. So this is the daily opening price. And I wanted to target this level over here, 1.5, well, just under a 1.5R. Now, this is what's important to understand, right? This is where I want all traders to focus. What was going on here, right? What was going on inside of this level? So in order for us to catch this good trade to the upside, we want to know what was going on here. This is the main thing we're interested in. So if I just zoom in a little bit, now, as a trader, right, as an order flow trader, you're not interested in reading every number in the order flow, but what you are interested in is looking at the delta at key levels, and you're looking to see who is being rewarded. So let me ask you a question, right? So this was 11 past 10, 12 past 10, 13 past 10. Were these aggressive sellers successful, right? We had 3 minutes of a lot of heavy selling, right? Aggressive sellers, aggressive sellers, aggressive sellers, right? Here, here, and here. Especially here, we see 87 for 0, 8 for 0, 7 for 0. So we see a lot of finished auctions down here as well. Finished auctions, if you're new to the channel, finished auctions just represent that buyers and sellers aren't actively or aggressively trading, right? So we don't see any contracts, ask contracts, right? 0 on the right number means that the ask value is 0. So the number of aggressive buyers hitting contracts at those prices is 0. There's no contracts of buying over here. There's only aggressive selling. So if we can break above the zone over here, who is in control? So it's the opposite of what happened on Thursday. So here we see aggressive sellers, and we see a break to the upside. So I'm just going to write here, upside break. So aggressive sellers with an upside break, that's what kept me in the trade. So I was happy to ride this trade, even though the price action itself, this was quite difficult price action. I didn't like sitting in that price action. It was a little bit weird, but the confirmation came from the order flow, right? So again, this trade was around 1.5 R. So again, not the highest R multiples because of this choppiness. I didn't really like the price action, but again, key level entry order flow. So you're seeing, again, aggressive sellers, and we see constant breaks to the upside. So entry at 67.22, stop loss at 67.04, eventually trailed it up to here, and let the trade right up to this area here, the next sort of key level, the next 15-minute fair value gap. So that was Friday's trade. So we had a really good week. So we had a break even on Tuesday, and then Wednesday, Thursday, and Friday we hammered again. So again, we had about risking about $300 to make just over 410, right? So that's kind of my trade today. So about a 1.3 or 1.4 out risk reward. So again, if you like this video, give it a like, give it a thumbs up. If you have any other questions about order flow and how to use it to catch these kind of trades, just feel free to drop them in the comments.